Hey everybody, it's Daniel here from InfoRest. Hope you're all doing well. So guess what? The Canadian housing starts are soaring. They're getting better and better. But does that mean the Canadian real estate market is doing well? It's rebounding and we're going to see massive demand because of this? What's going on? Well, let's take a look at this article here. It comes out from Better Dwelling. It says Canadian rental bear market is just getting started, according to BMO. Canadian housing starts are soaring even as demand crashes, especially in major markets. CMHC data shows new home starts climbing in June, hitting one of the highest levels in years. They may seem like a shift in market confidence, but BMO's warning, it's anything but. What's actually happening is developers are pivoting into rentals as home buyers retreat, with a massive pipeline of projects setting the stage for another wave of price corrections. So even though you may think that housing starts when they increase and builders are building more houses, that must mean there's demand. But actually what developers are doing, according to BMO, is that they are building these houses, these properties, for the rental market, because people are just simply not buying with rates where they are and with the economy, getting soft. And also with the unemployment rate in Canada getting worse off. There's just no way. And cost of living continues to be high. So how will someone get a large down payment, pay a massive mortgage, and keep afloat? So that's why a lot of these developers are moving into making these rental properties for the rental market. So it goes on to say Canadian housing starts hit seasonally adjusted annual rate SAAR of 283,700 units in June, rising 0.4% from a month before and now sitting at the highest level since 2021. The strength comes despite demand falling to one of the weakest levels on record. If you look at this chart below, you see that the condominium housing starts is dropping like a rock. As you know, the Toronto condo market has been under pressure for quite some time. And condo starts have been, across major cities, are down roughly about 30%, according to the bank. In Toronto, they basically dropped 60% as investor demand evaporates and talent flees Ontario due to cost of living, right? Just like I was saying, in Toronto, cost of living is still high, right? Ontario and Canada, it's high. And then on top of that, you have all these condos sitting there and investor demand dropping like a rock and people fleeing because no matter how much money you're making or trying to make, it's just not enough. And then when you look at Canadian housing starts in the blue, it's moving up for rental centers, right? So there's a shift. And that's the thing. The thing is, you have to know is that this is starting to be the new theme, especially when things are going to get worse off down the road, especially in Canada when the unemployment rate is getting worse off. Right? In my previous videos, I talked about this, how the Canadian unemployment rate is moving higher and higher. In Toronto, it's already 9%. We're almost at double digits. So if that's the case, things are not going to get better. And what are they going to do? They're probably going to go and print more money to save the market, which is going to do what again? Which is going to cause the cost of living and inflation to get worse off. This is the thing you have to note, is that this is a new regime or a new pivot point where, yes, let me correct myself. Yes, over the years, we've been kicking the can and prices have been getting worse off. But since COVID, things have got way worse with the money printer. And expect that to come again, which will make things even worse for consumers, making it more expensive, making it more difficult to purchase a home, to purchase an asset, right? So what will you do, right? What will be the theme going forward? When you look at just the stock market as a whole, right? I talked about in my market update. You can check it out there. The stock market continues to move up higher. NASDAQ continues to move up higher. Toronto Stock Exchange continues to move up higher. Hey, gold also is moving up higher. Bitcoin's moving up higher. Real estate prices, although yes, down and have been fluctuating in certain markets worse than others. But guess what? Down the road, they will be higher too. Why? Because of all this money printer, because of the money printing that's going on and the devaluation of currency, it's going to get worse and worse, making things more expensive. And then you're going to see this trend here, this trajectory, where people are going to become more renters than owners. Wasn't it someone who said that you will own nothing and be happy? Who was it? Was it like BlackRock or the head of BlackRock or something? Right? So one of those big companies and those big CEOs mentioned that we are moving into that trajectory. And with AI, it's just going to make the gap worse, the inequality gap worse. The rich are going to get richer. They're going to save more on cost because they don't need more employees. AI can do it. They're going to get all the profits for themselves. The investors are going to keep it. They're going to get richer. Their stock prices are going to go up. The businesses and the asset prices are going to go up. And what happens over time? People get worse off in terms of their finances, especially if they're all in cash. The salary doesn't keep up with all of this. And people get poorer. And especially the middle class are now being pushed out. And it's becoming worse for them because their salaries and wages are not moving up at the same level of asset price inflation and everything else around them. So this is a pretty interesting article here. Just BMO themselves, a very big bank in Canada, talking about how developers are moving more to the rental market. And yes, starts are moving up, but it's not because we are seeing demand. Demand is decreasing, but it's because the developers are shifting their strategy towards rentals since it's becoming more and more harder to purchase. And don't get me wrong, right? If there's a recession or a crash, then it might present opportunities for some to get in and purchase. But then when prices are low and then they have to print all over again, just think 10, 15, 20, 30 years again, it's going to get worse off. Right? And BMO is saying that, the correction has not ended. We can continue to see further price declines going forward. So very interesting. It'll be also interesting to see how this plays out in other markets like the US. It's holding up. It's quite resilient in terms of their unemployment rate and job numbers. But if you look into it deeper, it's not as rosy as you think. But yes, Canada is leading when you're looking at versus Canada versus US. They're leading in this market in terms of weakness and in terms of their economy weakness, getting weaker. And you are seeing the unemployment rate get worse off in Canada. And it'll be very interesting to see how that plays out in the coming months, in the next year or so, when further rate cuts come and everyone tells you that that's a great news. Not exactly, not really true. It's because there are underlying factors and there are problems in the economy that's causing those rate cuts, the retaliation from the central banks to do something about it. So let me know what you guys think. Leave a comment, subscribe, hit the like button, bell icon to be notified of the next video, and I'll see you guys around. Cheers. Bye.